Welcome to BISP Solutions. I'm Sianchi Jain, and today we will see change in method of consolidation from subsidiary method to equity method. If a parent entity is holding more than 50% shares in subsidiary company, then we will use subsidiary method for consolidation. But if holding company or parent company holds less than 50% shares in the subsidiary, then we will use equity method for consolidation. So let's get started. I've already created the smart view. First, we will see the subsidiary method and then subsidiary method in the month of Jan and equity method in the month of February and its adjustment, how the adjustment takes place when the method of consolidation has been changed. So let's for suppose take the subsidiary method and the ownership, let's take it as 80%. This is my smart view I've already created and I have already defined my POVs. West 101 is my holding company and West 102 is my subsidiary company. So let's input the figures and then run the rule of consolidation for 80% ownership. Let's get started. Debtors as, let's take debtors as 85,000. Bank Citibank as 1 lakh. Machine as 1,50,000. Common stock as 5 lakhs. Creditors as 15,000. Then income as 2 lakhs. Direct wages 55,000. Salary overheads as 1,25,000. Let's input figures for subsidiary as well. 65,000. 1,50,000. 1,50,000. Common stock as 3 lakhs. Creditors as 25,000. Here it should be 15,000. Income as 1,50,000. This let's take suppose as 20,000. 90,000. And in our investment in subsidiary, let's take it as 2 lakhs. Now we will submit the data. As you could see, our data has been submitted and our investment subsidiary has also been depicted over here. Now let's go to our application and run the rule of consolidation and define our ownership percentage. This is our application. We will go to consolidation and define our ownership. Let's check our POVs first. Scenario is our plan. Our financial year is 2015 and period is January. Select OK. Then we will search for our entity. Our entity is West 101 and 102. Let's change its ownership percentage to 80%. When we change its ownership percentage, its control gets yes, and minority interest is automatically calculated to 20%. We will save the changes. Then we will go to actions and recompute the ownership data. We will again check our POVs. Scenario is plan. Financial year 2015 and our period is January. We'll click on recompute. The computation is successful. Now we will run the rule of consolidation. We will go to data through navigator. Data status. Now we can see West 101 and 102, its status is impacted for the month of January and are on the selected POV. So we will run the consolidation rule, click on actions, then business rule. We will click on consolidate. We will check here our POV again. Our entity is correct, W100. Entity period is January. We will select it. January. Our scenario is plan and year is also 2015, and we will click on launch. When we click on launch, we could see the status of our entity West 101 and 102. It's now also impacted. We will click again on refresh. Sometimes the application does not run properly. That's why these error occur. Yes, we can see West 101 and West 102, its status has been changed to OK. When we run the rule of consolidation, its status has been changed. It took some time to refresh it. Now it has shown the correct status. Now we will go to our output sheet to check our to check whether consolidation has run properly or not. We'll go to output. Here also, now here, POV, we will take the POV of at the top members. We'll define the POV of top members. I've already created the smart view. Now we will just click on refresh and check. When we click on refresh, we could see a consolidation has been run because investment and subsidiary got eliminated. Now let's check whether consolidation has been run properly or not. We will check whether both the figures of entity have been combined or not. Click on refresh. Okay. Now we will click on refresh. Now we could see. Now let's compare the figures. 85,000 plus 65,000 gives us the result 1,50,000. 1 lakh plus 1,50,000, 2,50,000. 1,50,000 plus 1,50,000, 3 lakhs. Similarly, all the figures have been combined. Now let's calculate the goodwill. How we have calculated the goodwill? Minority interest and our retained earnings. Because these simply do not get consolidated, we have to do the working for it. Now let's calculate the goodwill. For goodwill, we need to have the investment in subsidiary. So our investment is 2 lakh. The net assets of subsidiary are common stock of the subsidiary is 3 lakhs. Common stock of subsidiary is 3 lakhs. So, and our ownership is of 80%. So 80% of 3 lakh is 2,40,000. So our goodwill came to minus 40,000. Negative goodwill shows that it's not a goodwill, it's a capital reserve. So we have the goodwill 40,000. Now let's calculate the retained earnings. Retained earning of parent was, retained earning of parent is 20,000 and that of subsidiary is 40,000. So Parent retained earnings of parent is 20,000. And retained earning of subsidiary, we will take the 80% of 40,000. 40,000 into 0.80. This is 32,000. Total retained earnings of the consolidated entity is 52,000. We have the figure 52,000 over here, retained earnings. Now let's calculate the non-controlling interest or minority interest. Share of subsidiary now is 20%. So subsidiaries common stock is 3 lakh. 3 lakh. Now 20% of 3 lakh is 60,000. And retaining of subsidiary will be 40% of, sorry, 20% of 40,000 is equals to 40,000 into 20 comes to 68,000. Our retained earnings at 68,000. This was for the month of January. Now, for suppose in the month of February, our ownership has been changed. That is from 80%. Now the subsidiary, the holding holds 40% of the shares. When the parent entity holds less than 50%, then the method of consolidation will change, and then entity has to follow equity method for consolidation. Let for suppose some of the transaction took place transition in the transition period of the February, like suppose 50,000. Income is 30,000. For subsidiary, let it be 20,000. 20,000. Now, as we have changed, our ownership has been decreased. Our investment also decreases. So we will, let's suppose our investment has been decreased by 20,000. So we have written over here minus 20,000. Now we will submit the data for the month of February. For the month, we'll click on submit data. Our figures have been submitted. Now we will go to our application to define the business rule and compute the ownership. Let's go to consolidation. Now scenario is plan. We will again define our POVs. Scenario is plan. Year is 2015. Period is February. Entity was West. Now we have to change the ownership percentage from 80. We will change it to 40%. And as soon as I change it to 40%, control becomes no, method becomes equity, and there is no minority interest in the equity method. In fact, in equity method, figures of parent and subsidiary do not get consolidated. Only there is a change in goodwill and retained earnings. Rest, all the figures of parent will be there in the consolidated entity. So let's save our changes. We compute our ownership data. Let's check our POV again. Plan 2015 and February. We compute. The computation is successful. Now we will run the rule of consolidation. Data. We could see that the status of West 101, 102 got impacted in the month of February. Now go to actions, click on business rule, click on consolidate. Now we will again check our POVs. Our entity is correct. Now we will have to change the period from January to February. Okay. Rest our POV is correct. We'll click on launch. If such error comes, we need to refresh and then we will get our result. Now let's check the status. West 101102 status has been changed to okay. Now we will go to our smart view. This is the output sheet that I've prepared. All the POVs have been defined. We just need to click on refresh. This is for February 2015. We will click on refresh. Let's check whether our consolidation has taken place correctly or not. We'll change the name of entity. Oh, 102. Let's refresh it. Now let's check the result. As we could see, 85,000 and 65,000 comes to 1,50,000, but but combination of figures does not take place. Only the figures of parent entity will be there in the consolidated entity. We could see 85,000, 85,000, 1,50,000, 1,50,000, 1,50,000, 1,50,000. There is no addition or integration going on. Then common stock will be 5 lakh, 5 lakh. Common stock is of parent. It obviously comes of parent. Then 15,000, 15,000, 15, 15, 30, 30, 30, 30. And we could also see our investment have been changed, had been reduced to 1,80,000. Previously in the month of January, it was 2 lakh. Now here we will have to see the adjustments through goodwill. And you can also see there is no minority interest because there is no control. And we will check retained earnings. Okay, now let's calculate goodwill and retained earnings. Copy the format. Now investment has been reduced to minus 20,000. So we will take here minus 20,000. Now change in net asset was how much? Change in we will take the net asset of subsidiary. That is, will not change in net asset. It's only the net assets. That is 40% of 3 lakh. 3 lakh. 3 lakh is the common stock of subsidiary. So 40% of 3 lakh is 1,20,000. And goodwill of January was minus 40,000. We could see minus 40,000. So our goodwill is 60,000. Something went wrong. Wait a second. We could see 60,000 here. I have refreshed it, so I could see the figures. I've refreshed it twice. Now my figure is coming correct, 60,000. Now retained earnings of parent was 20,000. So no, now I think it has been changed because we've inputted the data. So retained earnings of parent is how much? Retained earnings of parent is 50,000. 50,000. and that of subsidiary is 60,000. So 40% of 60,000 is 24,000, comes to 60, 74,000. We could see 74,000. And in the equity method, we will not calculate the minority interest. So that is 0. That's all for today. For any queries, please reach out us at www.bispsolutions.com. Thank you.